What's up everyone, this is Kenny here from Property Stories, and today we're going to answer another question here. This is regarding rental income. Question asked on YouTube by David Ngee. Curious, if for example the rental income is 1,500 and your personal income is 5,000, will the bank take the total of 6,500 as your income, or do you need to deduct costs, maintenance fee, loan repayment, etc.? The answer here is yes and no. Okay. For this answer this question, I'm just going to assume that 5,000 is a net income. Remember, the banks will only take net income. Net income means like after your gross minus your EPF and your SOXO or EIS, whatever it is. The net that go into your bank account, that's the one the bank will take in. For this purpose of this question and answer, I'm going to take 5,000 as a net. So the first is yes, because why? Because remember I mentioned that some banks, they take 100% of your rental income. Okay, 100% rental income is based on what? They based on tenancy agreement. Okay, tenancy agreement, and of course the bank, the other two documents that I mentioned, they has to tally with the bank statement and also the ownership, the proof of ownership. So if these three documents tally, they will take 100% of the rental income. Yes, they don't take into account those maintenance fee, the cost, loan repayment. No. They take that full amount, 1,500, as your income. So to answer this question is correct, 5,000 plus 1,500. So your total income, if the bank take 100% of your rental income, is 6,500. Okay. The second part is no, because remember, not all banks do take 100%, and some banks don't take rental income also. Some banks take 50%, but in general, right, it's about 70-80%. So I'm just going to use the one that is the general one, which is 80%. 1,500 times by 80%, you get 1,200, right? So 1,200 plus the earlier 5,000 income. So this person's income is 6,200. Again, they do not take into account the maintenance fee, the assessment, or whatever repair cost that you might have to minus from the loan. No. This one, repair cost and everything, this maintenance fee, loan repayment, everything, this one is the one that you report to income tax. This is not what you report to the bank. The bank will only look at the three documents that I mentioned earlier: tenancy agreement, bank statement, and proof of ownership. Okay, and if your tenancy agreement states your rental income of 1,500 a month, which is stamping, and of course can prove, okay, then the bank will just based on that 1,500 per month to calculate your income. The one that you're mentioning, minus everything again, that is for you to report to the income tax, not the bank. Okay, do not get confused. There's two different organizations here, the bank and income tax. I hope that clarifies it, David. Thanks for the question. That's a very good question. And if you have any more questions, just ask down below. I'll try my best to take as many as I can and answer in this video form. Once again, this is Kenny here from Property Stories, and I'll see you again in the next video. Bye bye. Oh yeah, subscribe if you haven't yet. Bye bye.